Hey traders, welcome to our weekly show. Great to see you all. Happy Sunday, everyone. Hope you had a great weekend. We're just coming out of a pretty waterlogged weekend where it was a really mild tropical storm that came through our area, but had a little bit of weather come through. So glad to have that behind us, getting ready for the week ahead now. So as always, let's go ahead and jump into. So I've been working on the watch list this afternoon. That's my Sunday routine. Sundays are how we prepare for Monday, not Monday morning. And thanks as always for being here for the show. All right, so of course we're going to get to your questions, and we're going to kick it off with a few looks at some of the broader averages. So let's do this first. So the broader averages that are in play right now in terms of clarity, and let's talk about where our daily time frames are right now. And by that I mean, where is the clarity? And I just realized my hang on one sec. I don't know how many of you changed the I think it's called nightlight on Windows. Let's see. Here we go. I just have my nightlight turn on. Everything turned red. Okay, here we go. That's all better. All right, so let's talk about the structure of what we're dealing with right now. Yes, the end of May saw a significant retracement of the downtrend that had been in place by the 10th of May. And at this point, gang, we continue to be in just a holding pattern. Because on one hand, you have buyers that still believe that the Federal Reserve has already laid out what their overall plans for rate hikes are, and that without a significant ratcheting of inflation, that perhaps they've got this whole situation under control. And you've got the sellers, the bears, and all my cards on the table. I'm still quite bearish, not because of what I think, but because of the structure, which we'll get into in a moment. But anytime we have a downtrend, we retrace, and we have yet to really organize into anything other than the chop, which was preceded by the downtrend, I'm going to presume that the trend that is going to continue to have the most influence over the price action that we continue to see. And clearly, bulls nor bears are in control here, gang. Bulls nor bears. And that simply means that we want to shorten our time frame. So you might say, okay, Rag, we've talked about day trading a lot. Let's get tactical about why would we shorten the time frame to a 5-minute? Why would we think about shortening the time frame to whatever your preferred day trading time frame is? Why would we? When would we notice? How would we notice that that's the case? Let me grab my drawing tools here, and I'll show you why. When we go into summer, I typically like to day trade. When I look at, here we go, this area right here, okay, that narrow range in here, that narrow range, I'm stuck in a narrow range. That means that the market isn't following through outside of that, which makes any kind of swing trade on the daily really, really, really an issue. So, when we think about why would we shorten the time frame, do I want to do this every day? Probably not, because when I have a really nice trend on the daily like that, when we have a really nice trend on the daily, what we want to remember is we're probably better off shorting the rip. We're probably better off waiting for moves back into resistance, however it is that you identify resistance, whether it's moving averages or an indicator or support and resistance levels, what have you. Maybe it's Fibonacci, but we still want to focus on short the rip when we're looking at a dominant red grab candle environment, okay? All right, so I could go through and pretty much break down each one of the indices in the same way, but suffice to say, the NASDAQ is the one that has been contained the best, right? And this is the one that I'm most bearish in. The Dow is this index that is probably contained the least, although it looks a lot like the S&P. The S&P, of course, is going to look a little bit like the NASDAQ, a little bit like the Dow. It's sort of caught in the middle all the time. It's never the captain of its own ship. It's always going to be influenced either by the NASDAQ or the Dow or some sort of split in the middle, because you've got XLK, the sector, the tech sector, number one weighted in the index, but then you have where it shares some weighting with the Dow, and that would be financials, and that would be healthcare. So you can see the S&P sort of splits the difference, if you will, of the obviously very tech heavy NAS, but also you've got a very financials and tech heavy Dow. And that's where the S&P sort of lands in the middle. All right, so as always, gang, let's get to the questions. And again, this is why I'm bearish. And, again, look at what you see, not what you think. And I just don't have enough here on the daily time frames to look at this as anything other than A, chop, and B, chop, that a downtrend was first obviously organized, and then we went into this less organized in terms of what we're dealing with on the price chart, less organized environment. All right, that's really it in terms of the bigger picture. Okay, so let's get to the questions. All right, first up, Mark. Hey, how are you? For 2 weeks, mortgage rates slightly lowered and DHI is mostly up. Oh gosh, ITB, DHI, XHB, a lot of those names are choppy to slightly bullish. Yes, I'm with you. Here's a look at DHI, which was for a brief period of time. Here we go. Which was for a very brief period of time an overall downtrend that organized into, as you can see right now, I wouldn't call it an uptrend, but it's far choppier chop, if you will. Take a look at, here we go. Take a look at that area right there. That's the Darvis, right? That's that Darvis level that I will continue to keep an eye on. There we go. That's a Darvis level that I will continue to keep an eye on. And, what we want to do overall, and let's see. There we go. Not Mr. Walker. Mark, there we go. So, yeah, DHI, Mark, is next week's FOMC rate hike. So, likely to change that. I don't know, my friend. DHI, ITB, XHB, the only trends that are still heading down in those that I can even recall, BLDR, Lowe's, Home Depot, very few. Yeah, very few. So I would say this. At some point, there's going to be realization. At some point, we'll likely hit some overbought resistance zones. But I don't want to, at this point, let's look at it this way. Mark, I've lost my edge. And if my edge is a trend, preferably up, and now in many cases down, if I've lost my edge, then I just want to find other sectors and other symbols where I can find better clarity. Clarity then is going to be the environment that we're going to be better off looking at, better off trading. So, but to your point, I would presume that the wake-up call of a half-point hike and likely a statement that accompanies what we should expect for July, and then even for September, we would think that would be a wake-up call. You can see that the bond market's done a little bit better a job of sort of getting the memo, if you will, both the 30-year and the 10. We can see them coming back down. That's signs of that. But I'll tell you what, Mark, I would still consider those two corners of the market, both ITB and XHB, let them cool off a little bit because they had a heck of a rally. All right, next question, Mr. Walker. When taking profits, a percentage gain exits or target price of underlying? Yeah, thanks for the question. I think I tackled it on the where you did ask me on the video. So taking profits are always the underlying, and stops are based on percentages. So, and you asked why. So really briefly, the reason I want to use targets that are based on price is previous support, resistance, gaps, volume, ledges, previous highs, things like that. The reason that my stops are based on percentages is I don't know where the markets are going to go, and really, frankly, neither does anybody else. And So for me, the only way that I can protect my downside is to understand as a percentage, if I'm wrong, how much is that going to cost me? And across all my positions, how much exposure do I have? And if I'm not putting it on some sort of fixed risk approach with my options trading, especially, and I have a number of opinions, my concern is that I'm getting closer to risk of ruin. And the variable stops are going to encourage more malleable risk management, right? I want to be aware that the hardest discipline in trading is usually taking that darn loss, because that's the easiest part to say, well, it's an unrealized loss and it could come back, etc. So I don't really want to give myself a lot of latitude when it comes to risk. I don't actually want to give myself a lot of latitude either when it comes to reward. I try to be very disciplined and mechanical on both sides of that risk reward scale. But that's why it's really more psychological than anything. And after that, it's really a matter of risk appetite. All right. Okay. So next question. All right. Let's skip over the less classy of us. This is the fun of being on the interweb, right? Reading these comments sometimes are hilarious. All right, the Russell, you got it. You got it. I was almost going to flash your comments so everyone here in the room could tell them what they think of you, my not friend. Not you, Musasam. I'm looking at the comment before yours. Unbelievable. All right, moving on. Taking a look at RTY. All right, my friend, what do we like about RTY? RTY is tricky because what we have is a market that was moving lower, bounced higher, and then again, it's going into a sideways range. This is what we're seeing across all the indices. I know that there's a certain segment of the trading population that feels this could continue, and it certainly could. Probably the place it could most likely, Mustasam, and I hope I'm pronouncing your name right, is in the Russell. Because a Russell is neither a high concentration weighted index. There's no sectors that are high concentration weighted. There's no individual stocks that are high concentration weighted, right? And so what I want to remember is that if this isn't led by a certain handful of stocks or a handful of sectors, what it's going to do next is far more unpredictable. Now, of course, we could look at the broader structure, right? The broader structure being the market moved lower. Now it's moving sideways after a bounce. And yes, I'm still going to have more of a bearish expectation for movement. But I will tell you, this is the one that's always going to be a wild card because it's not weighted anything like the NASDAQ, the Dow, or the S&P. And there's 2,000 stocks, obviously the Russell 2000, weighted within it, and there's not really a clear leader in a handful of stocks. Think about it this way. You look at Microsoft, Apple, Amazon, Facebook, Google, NVIDIA, Tesla. That's your core in the NAS, and the NASDAQ's pretty much going to go where they go. You can say the same thing about the S&P. Add in a little bit of financials, and the market's going to pretty much go where they go. You can't grab that group within the Russell. It just doesn't exist. So that's something I would keep in mind. But the path of least resistance for me is still lower. I hope that makes sense. All right. Thanks for the question. Integral. All right. Good evening. What new desk chair am I trying out? This is a secret lab I'm in right now. I think it's made by All 33. I just picked that one up about a month ago. I picked up two of them. My mom's been having some back problems, so I picked one up for her, and it sits you upright. It's from All 33, and I can't remember the name of the chair, but I think they only make the one chair. So All 33, and that's the chair I'm checking out right now. Unfortunately, I spend a lot of time in my chair. It's not great. They say sitting is the new smoking, probably, and so. Yeah, having something where I'm not slouching, having something where I'm sitting up, it does help. It help. That's the question, Integral. But I still do love my secret lab chair. This thing has served me very, very well. Just trying something new, seeing if I can't find something that helps my mom's back. All right, next up, my thoughts on new long position. Oh, I'll tell you what, Halliburton and Schlumberger, absolutely, Manu, are on the radar. So when you look at OIH, it does not look good. It does not look good at all. And I'm fighting off a sneeze, and I have been for about 5 minutes. Give me one sec. Sneeze or not, I don't know. All right, I did. Whew, okay. Don't need a mic on that one. All right. my Halliburton and Schlumberger opinion is going to come from indirectly from a commodity standpoint, crude oil, more directly from RBOB, because that's a very good trend right now. And then oil services, not an uptrend. It's trying to reorganize into an uptrend north of the 200, right? And then you got Schlumberger and Halliburton as your number one and number two. Yeah. So I don't have a huge problem with either one of those. But when I look at the OIH, right? Let me show you the multi-chart of the OIH. Let me show you that. And here we go. Yeah, take a look. Double green. So Schlumberger over Halliburton. But look at all the double green stocks that are here. So you have your Schlumberger, TS, P10 we've been in before. It's been a minute. But I would put those on the radar. Now, if you're an options trader and you're not looking to play the underlying stock, make sure you check the liquidity on a number of these names. And remember that OIH is a high concentration weighted sector, and it is almost exclusively Schlumberger and Halliburton. But look at the structure within this. So yeah, good eye. I definitely keep an eye on that. Absolutely. I absolutely keep an eye on that. My thoughts on short positions on DUOL. Sure. Let's take a look at the structure. And survey says no. So Manu, if I'm always, did I get the right symbol? DUOL. So if I'm always looking for structure, I can't say I love the way this looks. I'd need to be up in this area of ideally the previous Darvis, or at minimum around 97. I'd like to see an overbought stochastic. We're in a neutral environment, so the overbought short would make sense, but this is very choppy. So Manu, that's just a big cup of nope for me. Yeah, that was just a big cup of nope. All right, moving on to ES is showing a squeeze in the daily. Is or does a squeeze ever something you look at? I don't really look at squeezes, no, unless we're looking at a compressed market. So it's not, look, everything, including the squeeze, has an environment that it's ideally suited for. This is not only the tools that I use, this is everyone's tools. The squeeze tells you by its name what we should be looking at. Compressed markets. This is a pretty good compressed market. But my expectations for movement are going to be controlled by, first, that compression that validates, for me, the squeeze. Then we're south of the 200, where we were in a downtrend. So I'm going to have a bearish take on this. And then we have so many folks here in the Simpler community that are talking about when we get these setups. So I really don't have to keep an eye on it because it's just such a common conversation here amongst the community. But I personally don't do a lot of that unless the market's compressed. We happen to have an S&P that is. So the more you have blue grab candles, you have a narrow range, you have a neutral market. You can even get more specific about the lower volatility and about the narrow range when you go take a look at the way in which the historical price movement ranges are at preferably less than 1.5 times what they normally are. So if I have a price movement range of 2x or less, it'll get my attention. And if I have a price movement range of 1.5 or less, then it looks really, really solid in terms of that compressed market. And that squeeze is going to be absolutely one of the best ways, actually the best way, to decode a market that is compressed. And if you have a trend Then you get compression, it's even better. So think about 2020 and most of 2021, for those of you that are fans of the squeeze, when we had better flow, either up or down, mostly up. And when we had retracements that sort of lingered in the wave or lingered at their pullbacks a little bit longer and then compressed, what did they do? They usually exploded higher. And those are even better environments. Again, think about the condition of the market, right? Think about that as the determining factor of the strategy that you'll use and the tools you'll use to confirm that strategy. So for me, that compressed blue grab candle environment immediately is a reason to start looking at momentum breakdown strategies. And then, of course, going from the condition of the market, the structure, to the strategy, to the indicator, that would lead us clearly at the footstep of the squeeze. So thanks for the question. Tim asked, do I mainly day trade the indices and sectors, or will I day trade individual stocks as well? Tim, straight up, sometimes I just lose. Really, sometimes what happens is I will, for example, I will lose the stock emphasis until I have clarity at this index and then sector level. Now, the same way that we can crack open an index or a sector like this and look at the daily time frame, I can do the same thing with a 2 or 5 minute time frame. I can look at 2 minute, 5 minute charts and find relative outperformers within a sector or an index. And that's definitely something we'll be talking about in my next class. We're going to talk a lot more about day trading. I've been talking about forever this kind of idea that going into summer, I tend to like to shorten the time frames. Volume starts to dry up, volatility starts to dry up, and a lot of times follow through on the daily time frame becomes a little bit more difficult to come by. So what I like to do then is shorten the time frame. Why? Not because I want more trades, but because I'm suspect of the potential for follow through. And if I don't believe we can follow through day after day or week after week, right? Then I'll say, can we get follow through for 30 minutes? Can we get follow through for 60 or 120 or 240 minutes? Can I trade one of the 3 or 4 2-hour windows that appear every day and say, hey, for a very short period of time, can I get enough organization on a 5-minute chart to get a setup, to get that setup to trigger, and then get the follow through? And on a daily right now, that's kind of tough because of the lack of the follow through and the lack of the trends that we're seeing right now. A lot of those trends are broken and we have chop. And like I said, when that chop gets really tight on the daily, that's a really great sign to say, you know what? Either A, I'm not going to do anything, or B, well, maybe I'll take a look at some day trades. All right. So for me, index sector stock. So stocks become the last thing. Tim, sometimes I will, but let's say I want to take a look at Apple intraday, for example. Let's see what I'll take a look at Apple. And what's going to happen there is that I've already looked at the ES, and I've already looked at the NQ, and then I've already looked at the XLK. And then finally I'll say, okay, is there some kind of structure on Apple that is making sense for us? Is there some sort of structure on that stock that's saying, hey, here's your setup, right? Here's your structure, here's your setup. Here are the indicators that are confirming the move. And that's the way that I want to focus on stocks. Always last, Tim, because I want to make sure I've got a good read on what the tide is doing at that index or sector level. So tide first, which means stocks last. But the answer is yes, but sometimes we just don't get there because there's better clarity at the index or sector level. And then for my futures traders, Tim, they don't ever get to the individual stock really because they're focused on S&P futures, NASDAQ futures, gold futures, crude oil futures, bond futures, gold futures, and they'll stay at that futures level. And then those traders who say, yeah, Rog, I'd rather focus on those commodities and on those indices, but we have liquid ETF options in every one of those situations. Some traders will say, yeah, Rog, I don't know that I want to play the futures with all that leverage. Little too rich for my blood, right? They might say that. And then the alternative is the ETF options. So that's usually how that process goes. All right, next up, what do I think of buying calls on ADM here for a swing trade? JMO, straight up, the commodity trade, grains, and those grocery store commodities, the wheels have just straight up fallen off the wagon. And ADM, DBA, corn, wheat, I think bean oil is just hanging on by a thread. I'm going to leave that list of names alone. They were very good to us for a good period of time, and now let's talk about we've lost edge, right? I mean, so swing means, okay, we're going to take an overnight trade and maybe for days or weeks, but why would I focus on a stock for a swing? And for me, JMO personally, it's because it's in a trend, up or down, preferably up. And if it's not in a trend, if it's in chop, why would I expect some sort of inflection point? Because I'm at one of the extremes of the range. So range extremes will also help too. Or as I like to say, in chop, your edge, your advantage is at the edge, the upper or lower edge of the chop. And we're not in that area. And I really, as a general rule, JMO, I don't want to prioritize non-trending markets. So thanks for the question. Good stuff. And I think a lot of traders need a process to say, Rock, how do I know if a market's in an up or down trend? Use the free grab, GRAB candles that I give you all. They're available built into the TradingView platform. We have them available for Thinkorswim. You can download them for free over at countdowntrader.com. And then start looking at, gosh, is this chart dominated by green? Is this chart dominated by red? Or do I have a lot of neutral blue candles? And if I have a lot of neutral, I'm probably not in a trend. Dominated by red, downtrend. Dominated by green, uptrend. And that's, visually one way we can get a better read on, what is the environment that we are trading within or trying to set up a trade in. Let's see, JNK. Sure. So JNK, HYG, IEG, TLT. Take a look. This is JNK. Here's HYG. Here's IEF. That's the 10-year. Here's TLT. And they're all heading lower, right? This is high yield, corporate. Of course, here's your junk. And again, we're heading lower. We bounced quite rapidly, as we saw in the equity markets. And so I think a lot of you are going to say, Rock, take a look at the setup on JNK. Darvis resistance, Darvis resistance, Darvis. So you have a very tight range of resistance here. Testing it here in a neutral environment. So testing that resistance level with an overbought slow stochastic. That's pretty much my process for overbought, chop, short sell. So JNK, that's my take on that one. Axel, great question. Thanks. I haven't looked at JNK in a while. I'll usually take a look at TLT, IEF, that's the 30 and 10 years. So I'll usually look at those quite a bit. HYG is a good one to look at. JNK is another one. And mostly I started looking at these back during the pandemic when the Treasury was basically buying these, right? That's a really nice looking. I was looking at this and thinking, gosh, I wish I would have seen. Yeah, good eye. That's terrific resistance, neutral environment. Trend we inherited was down, so you already have a bearish expectation for follow through. Which, by the way, gang, this is exactly what I was describing on the indices. It's the same structure. It's the same idea. All right. Thoughts on short positions in XLY? Like it a lot. And I would say Tesla, Lowe's, Target, and Intel are also on that list, Manu. Yep, that's what I would look at on XLY. What are my thoughts on shorting VZ again? No, my friend. Telecommunications by way of the IYZ, it itself looks pretty much in a downtrend. But again, I can't emphasize enough. And that list is getting shorter, gang. There's no doubt this list is getting shorter. But overall, when I look at what's happening with VZ, here's how we compare, right? If IYZ was more liquid, I would just get puts here, right? This is compressed. This is a compressed market. It's at resistance. If I get an oversold stochastic, I'm going to get long puts, right? But it's not a very liquid. It's not a very liquid ETF. Cisco, my friend. Maybe Comcast. Nah, I don't even like that much. Cisco's really it. Cisco's really it. Or leave this one alone. So I'm going to leave that one alone. I'm going to leave that one alone. There's been a lot of strength in Comcast and T and VZ. Look at TMUS. It's part of a group that's been moving higher, and I don't want to step into that zone. Yeah, I don't want to step into that zone at all. All right. So gang, that's it. That is it for for the IYZ. Be very, very careful. Be super careful. All right. But could you look at XLC? If you look at XLC, you're still going to have the influence. Great question, Junior. Great question. However, this is Facebook and Google, right? So WBD, nice downtrend. XLC, probably the best bearish corner of the NASDAQ. But again, very spotty on liquidity. The 60 puts are pretty liquid on XLC. So that might be something worth looking at next week. Absolutely. The 60 puts, Junior, on that. Yeah. Jorge asks, oh, sorry, I didn't post your question there, my friend. Yes, great question. And also great question as far as IYZ versus XLC. Yes. What determines the trade flags changing color? Moving averages. The 8, 13, 21, and 34 EMAs. All right. What else do we have here? Tesla, Mike, I'm bearish Tesla. Yes, I'm very bearish Tesla. And Koopzilla, thank you for the bless you on the sneeze. I appreciate it. I try to cut the cam and the audio so I'm not blowing anyone's speakers up with a sneeze. And let's see what else we have here. My thoughts on Fed CPI. Javier, I haven't even got that far yet. But again, remember that CPI is going to be a macroeconomic, right, pillar. And if it's hotter than expected, that's actually what? It's bearish for the market. And if you want to know how, gang, if you want to know, and I saw the question about HPMRs and so forth. If you want to know how I trade, we did a live session on non-farm payroll Friday, and we recorded it, and it's available at the Simpler Trading YouTube channel. So if you want to see what I did and walk through that live, we started 5 minutes before non-farm payroll, and I walked you through the analysis for about 20 minutes after the data came out. So if you want to know how the HPMRs worked and how right now, Javier, I'm showing people how I am considering what good and bad data mean to the equity markets. That one I really dove into a lot of detail on that. Okay, dove into a lot of detail on that. For those of you that are curious about my HPMRs after many, many, many years, yes, we're going to talk about how you can get your hands on them. But right now, Jorge, I've been giving the indices to the Futures Room and the Sector Secrets Mastery. The Futures Room has had them for, I think, this point, a couple of years. I've made them available free to members, ES, NQ, YM, RTY. Same goes with the Sector Secrets Mastery, along with the ETFs of those indices. So we're in the process of expanding the list and making it available on TOS and on TradingView. But I've made a number of them available, and we'll continue to do so. I will continue to make in the Futures Room and in the Sector Secrets Mastery, the packs that I have available now, those will continue to be available for those traders. Okay. All right, gang. Thanks as always for joining me for the show. Appreciate it. Making it out here. Appreciate the questions. And as always, gang, thanks for tuning in. Thanks for, thanks for making the community as great as it is, because trading can be such an isolating thing. And it's cool to, on a Sunday at 6:00, talk to some fellow traders, prepare for the upcoming week together. And I appreciate your time. All right, gang, be good to each other. I will talk with you soon. All right. Tomorrow morning, actually, 9 a.m. Eastern, right here at the Simpler Trading YouTube channel. Check out that non-farm payroll video if you're curious about. Actually, let me make sure. oh, there it is right here. You'll see here stream 2 days ago, non-farm payroll, hot zone. And we did that for, it's 26 minutes. So yes, we started 5 minutes before the data came out. And then I walked through why my directional bias was bearish, why we shorted into the HPMR resistance, and the role that the daily chart had in it, the role that the intraday trend had, and the role that data that I look at before non-farm payroll comes out. What are those data points that help map to what our expectations are? So I think a lot of you might find that helpful. And again, the day trading is coming around because, gang, this environment is difficult. The environment's difficult because we continue to have transitions in trends. Trends are always great. Uptrends are the best. Downtrends are pretty good. But these kinds of retracements are always going to be difficult when they're retracements that keep going and the downtrend transitions to chop. We change our tools, not our directional bias, but we change our tools. And that's the transition that we've been in for the past 3-4 trading sessions. And transitional markets are always difficult, right? I think they're always difficult. And that's one of the challenges, probably the Achilles heel of being a trend trader. What happens when the trend ends, right? As they say, the trend is your friend till it ends. And I think a lot of you probably have a much more realistic, tactile understanding of how great trends are, but how that one last trend trade does feel. All right, gang. Thanks as always. I know I ran a little bit over, but thank you so much. Be good to each other. I'll see you tomorrow at 9.